Hey, good morning. Paul McMann here with Forex Smart Trade. It is Tuesday. Let's shut that off. And I think we'll be on right now. I always do that. I've been doing that the last few mornings. So I apologize. Uh, Here at Forex Smart Trade, Tuesday morning, January 20th, 2026, 6:30 in the morning. Here at Forex Smart Trade, our goal is to make trading simple and profitable. We do that in a couple different ways. One, to get started, we will give you anywhere from 1 to 4 trade setups a day. You copy them. By the end of the month, your account will be ahead of where you were at the beginning of the month. Last year, we had 85% return on the trades we gave out. If you want more than that, 1 to 4 trades per day, we will teach you how to trade using the indicators I'm going to show you today. And we're so confident that we can train you to do this profitably that once we've trained you, we'll let you trade with our money and split what you make. So you and us are aligned. You've got a mentor. You've got somebody who's kind of overseeing what you're doing. And if you're starting to draw down the account, we will step in and figure out what you're doing wrong and get it corrected before you blow up the account. So with that, let's go ahead and see what we've got this morning. Yesterday, generally on bank holidays, well, actually all the time on bank holidays, I don't trade. I find it easier. I find it easier not to trade on bank holidays. Plus, one of the benefits of trading is that you can take bank holidays off, and it's no big deal. So let's see what we've got. We've got to listen to this guy, and then we can.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
I've got, let's see here. With respect to the trade pattern alerts, we have a live trade session every morning at 9:30 a.m. If we don't find, so that you can see how it is figured out. If we don't see a trade set up, we will text it to you. We'll text it to you either way. Once the trade setup's there. I do 3 live trades a week, Monday afternoon, Tuesday, and Thursday morning, so long as it's not a holiday. Every morning around 10:30, again, so long as it's not a holiday. I take a look at the charts. Give or take, depending if I'm in the middle of something. I might be a little later or it might be a little earlier. And I don't really explain what I'm doing like I will this morning. But if I see a trade, I'll take it and send it out to you. And then again, in the evening around 4:15, I do overnight trade setup. Again, a different trade strategy than the one we're using now. We've got a dozen different trade strategies. I send it out during the night. We expect it to close so that when you wake up in the morning, you've got a trade already in the books. If you become a member and start using the indicators, you will We do live trades at 10 a.m., also at 6 p.m., and then we have lots of continuous coaching. We believe to be good at anything, you need a coach, and it's that constant repetition of the fundamentals that keeps you sharp. All professional athletes, even though they're very, very, very good at what they do, they still practice, and they practice the fundamentals. So why is it different in trading? It isn't. You need to keep working on it to stay sharp and trade properly. I have a little checklist that I go over so that I don't forget anything, because as you get older, you get forgetful. During the session, I don't really take questions, but questions are how you get better, and that's one of the ways we do add value, is that you've got somebody who knows what they're doing, who can guide you. So just get on my calendar, forexsmarttrade.com/schedule, and we can spend 30 minutes together to get the trade pattern alerts. Go to alerts.forexsmarttrade.com. It's $99 a month. It's 30-day money back guarantee. If for any reason you don't find it as good as we say, just ask for your money back, and we'll give it to you and part friends. If during that first month, if you are interested, in addition to getting the alerts, ask me, send me an email, and I can give you some one-on-one training on one of the strategies and give you access to the indicators. The alerts don't come with access to the indicators, but if you want to see how they work and get a kind of sense of whether trading's for you, we can do that. On Wednesdays at 3:30, I got office hours. There's a link in the emails. Just go to the link and join. I'm doing other stuff, but if somebody comes into the office, we'll answer your questions. It is a group session. There might be other people there. If you are using the indicators every morning, you should refresh them. Every day at the end of the day, you should take a look at the trades, look at the game film, the trades that didn't go the way that you thought. And our indicators have a simulator built in, so you can go back to the spot where you took the trade and see what the indicators were telling you. And more often than not, you will find a mistake that's made. And just being aware of those mistakes results in incremental improvement, and that incremental improvement results in increased profitability. We are technical traders. We are trading based on the price action. Some traders trade based on news events. That's not us. But we want to know what the news events are so that we can kind of trade around it. And to see those news events, I like to go to forexfactory.com. Forexfactory.com breaks news down into kind of three categories. Yellow, which is low impact, we ignore those. Red, which is orange, which is medium impact, I ignore these. Some people pay attention. And red, which is high impact. These are the guys I want to trade around. And right now, the next event coming up is this one, and it's all yellow. We don't have anything to worry about till tomorrow night with the pound. So we've got kind of clear sailing here this morning. So with that, the trade I'm going to do is something called the 10-point trade. As I mentioned, we've got many trade strategies, probably about a dozen, and we try to match one based on your temperament, your availability to trade, your risk preferences. This is the one that suits me. I like to trade it off of a 1-hour chart. On a 1-hour chart, trades are worth anywhere from 5 to 35 pips. Generally, I'm not going to take a trade if it's less than 11 pips, and I'm looking to get in and out within 1 to 3 hours. If I can make a couple 11 pip trades a day, I am doing terrific. So let's take a look and see what we have. There are 3 parts to the chart. This first part is This middle section is what we call the majors and minors. Red and green line is the major indicator. Black and gray is the minor indicator. Horizontal red line is the oversold line. Horizontal blue line is the overbought line. So basically, I'm looking for situations where we've started out overbought and the lines are going down. You can see the couple green candles, or we started out oversold and the lines are going up, and you see the green candles. If I see what I want here, then I'm going to jump up to my TNTs. There are 4 lines here, the 2 orange lines, thick orange and thin orange, and the 2 blue lines, dotted blue and thick blue. I want at least 3 of the 4 to confirm what I'm seeing here, because what's being measured here is different than what's being measured here. And then if I have what I want here, I'm going to go down on my pressure, and I want the lines to, again, coincide with what I'm seeing here. So when I get agreement against all 3 sections, I've got a pretty good trade. So here we're oversold, but I don't have agreement with the lines. Majors are going down, minors are going up. If I don't see what I want here, I don't need to look at the rest of it. Euro USD overbought and sideways. Both are kind of sideways, so nothing there. Now, here's a situation where we were overbought and the lines are going up, and you had still a big up move. Now, I generally don't take a buy when we are overbought, but here you can clearly see, you could have gotten 60 pips while we were overbought. That's not part of my trade strategy, but here, good trade, could have made money taking a buy when you're overbought. So nothing here. Pound USD. There's 4 things I'm looking for. 1, we started out overbought, which we did. Miners have already gone to oversold. I don't care that they've gone to oversold. I just want them to start overbought, and I want them to be going in the direction of the majors, which they are. So 1, 2, everybody's going down. 3, the red line has crossed over the black line, and the red line's crossed over the green line, and the black line's crossed over the gray line. So I've got that. And then 4, I take a look at what the slope of the green line is, and I want it to be better than 45 degrees, and it is better than 45 degrees. So I've got everything I like here. I also like that it is entering the channel. So I've got my 4 points. So I'm going to jump up to my TNTs, 2 orange lines going down. And the blue lines are inversely related. So what that means is when blue goes up, that means sell. So thick blue is going up, dotted blue is going down. So blue line's telling me sell. So 3 of these lines are telling me sell. So that's giving me the second piece of the confirmation that I want. And then the third thing, the pressure down here, I want these lines either going down, which they are not, or I want the red line on top, which it is. And so that's a point there. So 1 point, 4 points, 3 points, so 8 points. Also, I like that the green line is pulling away from the red line here. So I've got everything that I want. So that's the trade setup I'm looking for. But I've got a second step, a confirmation step. And that confirmation step is, rather than looking at just the 1 hour chart, I want to look at a full pound USD chart. And when I mean a full pound USD chart, it's showing me not just the hour chart, but a 2 hour chart, a 4 hour chart, 8 hour chart, 12 day. And the difference in the charts is how much information is contained in the candle. So this has 2 hours of information, 4 hours. And what I want is I want to see our major indicators overbought on both the 2 hour and the 4 hour, and they are. In this case, they're both going down. They don't have to be going down. They could be like this sideways, or this is still going up a little bit. But I want both of these two overbought. The reason I want both of these two overbought is if they're overbought, there's less of a chance of me getting stopped out on the trade, because that means they don't have much left to if they pull back, there shouldn't be much left in the move. Now, once I have that, on some of the trades we do, the take profit is predetermined. It might be 3 pips, 5 pips, 7 pips, 11 pips, like on the overnight trade. On this trade, I have to figure it out. So to figure it out, I'm going to go open a clean chart. And on that clean chart, I'm going to put some, I'm going to look at the full chart and drop some support and resistance in. And support and resistance are spots where the candles seem to naturally stop. And here, let's get rid of this guy. I came in, so it seems to be stopping here, 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 stopping in here, stopping in here, stopping in here. And I crunch up the chart so I can get more data points. As you can see, it even goes way back to here. Now, so this becomes the boundaries of which I'm going to trade within, between here and here, because I want to get out. Because like if I took a buy here and wrote it up to the and wanted to take profit that was up here, I would have missed it. It would have bounced and got out. And since I want to get in and out within 3 hours, I want to stay within this range until it breaks it. So, because you can see, came down, bounced, came down, bounced, came down, bounced, then broke through. So, so here I'm kind of trading big uptrend, started to go sideways or downtrend, but it looks like we're in an uptrend again. So I'm trading against the trend because I got to sell. And I want to know how much distance I have from where we're at to where we are. So we've got about, when I scroll over the line, you can see in the top left there, 8.8 pips till we hit this line. So I kind of like that. Let's save this. Let's go back and just take one more look at the signal. All right, we're going to take a 8 pip sell on the USD pound. So you can do that in your simulator, or if you're using MetaTrader, this is a demo account. So AU was pound USD. I'm going to do new order, market sell. I'm going to right click on it, go to modify, and 8 pips is 80 points. I click the little blue button, it does the math for me, and we'll use a 3-to-1, so 24 pips. Click modify, and in looking at this, see how we're touching these candles wicks. I'm going to just move this so that we're outside of that candle wick. So I'm going to take a little bit more than a 3-to-1. I don't want to touch anything. That's less of a chance of getting stopped out. So, and I want to just take one more look before I give you these numbers. I just want to go back to oops, what happened? So we're going to be on this wick a little bit. All right, well, this is close enough. This is close enough. All right, so we took a sell. I'd rather be a little more conservative. Sell on the Great Britain pound USD, especially since we're trading against the trend. Pound USD for 8 pips with a take profit of 1.34591. 1.34591 and a stop loss of 1.34938. I expect this to close within the next 3 hours. So now let's go and see if we got anything else. So this is the trade we just took. Oversold. We don't have agreement. Mine is going down. Major's going up. Oversold, disagreement. Oversold, disagreement. Let's go to the next group. This next group is non-USD pairs. That first page was USD pairs. Euro pound overbought going up. And here's again a situation where we're overbought and big run there. And what we're going to probably get because of that big run on the pound. So that's 40 pips, 400 pips. No, 40 pips, 40 pips there. Over the course of 3 hours. Whatever that, there was some news on the pound this morning. And that caused that big jump. That news on the pound caused that big jump. So that's why normally if it's a sell here, you're going to have a sell here and a sell here and buys here, but we don't have that. The reason this is different is because there's a bit of news on the pound. And when there's a bit of news on the pound, I guess I should have showed you this when I was going back here. There's a big move like that. There's usually retracement. So we started here and we went to here. And this is what we call a Fibonacci. And a Fibonacci captures movements in nature very accurately. Now, Fibonacci was an Italian mathematician who noticed this recurring pattern. So a retracement on Fibonacci goes to the 38% mark, and you can see it did that. And then the next one's the 50% mark. So we took our trade where kind of the next kind of stopping point is, which happens to line up with where our support and resistance are. So when this retraces after the news, we'll catch that. Australian dollar, pound or yen oversold, but everybody's going up, but we don't have the slope or the double cross. Overbought, kind of sideways. Oversold. Again, we don't have the steepness and the slope of the green line. So we're going to pass. And also, I want one of these to actively be trading when I'm trading off of a 1 hour chart. And it's evening in both of these markets. Pound yen oversold going down. Let's see here. Euro Australian dollar. Everybody's going down, but again, not quite enough of a slope here. So we're going to pass. So here are 6 more pairs. Oversold. We don't have the double cross. overbought sideways. Pound New Zealand dollar. All right, this is a nice setup. We touched overbought. Everybody's going down. Double cross. Red's on top. Black's on top. Good steepness on the green line. I will consider a trade so where the green line is like halfway, up to halfway. It's just peaked over, so I would still consider this. I don't mind that the miners have gone through. 2 orange lines going up. Thick blue going down. Thick blue going up. So again, 3 of the 4. And I have got sideways pressure with green line coming down. So I don't have the red line on top. I might consider this. I would go on to the kind of the second phase, the confirmation phase, pound New Zealand dollar. Interesting. This is oversold. I want both of these to be overbought. Now, even though they're going down, when we're oversold, there's a chance that these are going to turn and start going up. So I wouldn't take that because of this. I'm also not going to take it because we already have a trade with the pound in it, and I don't want to double up. If I was going to take another trade, I'd want it to be on a different pair as to kind of spread out my risk. So now, if all of these were going down, I might consider it, even though they're not overbought. If all of the indicators are going down, that's got some juice behind it. So let's see. Sideways, disagreement, majors going up, minors going down. Australian Canadian dollar. All right. Oversold, everybody's going up, double cross, green and gray on top. Steepness is just at 45 degrees. 2 orange lines going up, 2 blue lines coming down. So all 4. I get down pressure with red on top, so I don't have a point here. I want to have a point. Since each of these sections is measuring something different, I want agreement across all 3. And when I have agreement across all 3, that gives me a higher probability trade. So I'm going to pass. Swiss franc yen. Okay. Overbought. Been overbought for a while. I don't like it when it's been overbought for a while. I'd rather have it come up like this and turn and come back. But we've got the signal here. Overbought, everybody's going down, double cross, good steepness on the green line. Here, thin orange is going down, but the thick orange is sideways. And then I only have one of the blues. So I would pass because I don't have the 3 of the 4 here. Euro pound, kind of sideways, no. Pound Australian dollar. This is a good signal. 2 oranges, 2 blues, and I've got sideways pressure. What makes it sideways is the green's going down, the red's going up. If we didn't already have, even though this technically doesn't mean it, the green line is going down. If we didn't already have a pound trade, I would look at, we'll look at it real quick. Pound Australian dollar, Great Britain pound AUD. We touched overbought. So I would maybe consider this, but we're not going to take that trade because I don't want to. And we're on to a new hour. So we ended up taking a trade on the pound USD. It is about halfway to where it needs to be. Depending on how risk averse you are, if you wanted to, you could move your stop loss down to the entry. In fact, I think I'm going to do that. So if it does pull back, the worst that would happen is I'm just going to get stopped out. So I'm going to just pull this down to this side of where we got in. So if it pulls back, it'll just take me out and we'll break even on it. All right, gang. You want to learn to trade, find somebody who knows what they're doing, get them to teach you. Now, the way we're going to work with you is we're going to take baby steps. First is we'll just give you trades that you can copy. Once you see how well it works, you may be able to make enough just copying the trades we're giving you. And if you are, great, just do that. But if you want to do it more and become more involved, we're happy to teach you how to do it. Our indicators have been around for more than a quarter of a century. They work very well. We'll teach you to use them. We'll let you use our money and teach you to trade. All right, have a good day. See you again around 10:30. Bye-bye.